Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 5, that is, Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. So let us begin. This is lecture number 3. The first topic that we are going to discuss in this lecture is methods for providing depreciation. Methods for providing depreciation. Let us understand this. Generally, methods for providing depreciation is based on formula developed on a study and behavior of assets over a period of years for readily computing the amount of depreciation suffered by different form of business. I believe you all of you know that generally in openly there are five form of business. We have sole trader, we have partnership, we have cooperative society, we have HUF, and we have the corporations or the company form of business. In company also we have private limited company and public limited company. So all the form of business, the method of depreciation would be similar. So each of the methods, however, should be applied only after carefully considering nature of the asset and the conditions under which it is being used and the conditions under which it is being used. Let us continue. Methods of depreciation. Straight line method results in a constant charge over the useful life if the residual value of the asset does not change. That is, scrap value of the assets does not change. I believe you understood. The second method is known as reducing balance method, or diminishing balance method or written down value method that results in decreasing the charge over the useful life. Decreasing the charge over the useful life. Third is unit of production method. The third method is known as unit of production method that results in a charge based on the expected use or the expected output, expected use or expected output. The income tax rules, however, prescribe the diminishing balance method except in the case of assets of an undertaking engaged in generations and distributions of power. Straight line method. The first method is straight line method, SLM. According to this method, an equal amount is written off every year during the working life of an asset so as to reduce the cost of an asset to nil or its residual value at the end of the useful life of the asset. The advantage of this method is that it is simple to apply and gives accurate results, especially in case of lease and also in case of plant and machinery. This method is also known as fixed installment method. So straight line method is also known as fixed installment method. Fixed installment method, or it is also known as original cost method. Original cost method, that is OCM. According to this method, an equal amount is written off every year during the working life of an asset so as to reduce the cost of an asset to nil and its residual value at the end of the useful life. The advantage of this method is that it is simple to apply and gives accurate results, especially in case of leases as you have just seen. And this is also known as the fixed installment method. Let us continue and see the formula for straight line method, how to calculate the straight line method depreciation. So We'll write the cost of an asset, cost of assets minus scrap value divided by the estimated useful life of the asset. Cost of the asset minus scrap value divided by the estimated useful life of the asset. What we'll get is the straight line depreciation. Straight line depreciation rate. How we will be calculating the rate of depreciation? So straight line divided by the cost of asset multiplied by 100. So that will give us the rate of depreciation. So over here we will write straight line depreciation. Straight line depreciation, that means amount divided by the cost of an asset multiplied by 100 will give us rate. Supposingly the cost of the asset is 1 lakh. The cost of the asset is 1 lakh and straight line depreciation is 10,000. So this will give you a rate of 10% per annum. 10% per annum. Understood? The underlying assumption of this method is that the particular tangible assets generates equal utility during its lifetime, but this cannot be true under all circumstances. The expenditure incurred on repairs and maintenance will be low in the earlier years, whereas as the same will be high in case of assets when it becomes old. Apart from apart from this, the asset may also have varying capacities over the years, indicated logic for unequal depreciation provision. However, many assets have insignificant repair and maintenance experience for which the straight line method can be applied. I believe it is clear. While using this method, the period of use of the asset in a particular year should also be considered. In the years of purchase of an asset, it may have been available for use for the part of the year only. So accordingly, depreciation should be either proportioned to reflect the period for which it was available for use. So supposingly, the accounting year is 1st April 2020 to 31st March 2021, and you have purchased the asset on 1st January 2021. That means what? Basically, you will be using the asset from 1st January 2021 to 31st March 2021. Does it make sense to you? Yes. Okay. This means you will be using the assets for 3 months only. So charge the depreciation for 3 months only. It's quite logical. Take an example over here. If an asset was purchased on March 1, 2017 and the enterprise prepares the financial statement on 31st March 2017, depreciation will be provided for the period of 1 month only. 1 month only. Similar situations will arise in the year in which an asset is retired from the intended use or is sold. However, under income tax rules, the depreciation is provided for full year if the asset was used for more than 180 days, that is more than 6 months in the financial year. But that is about the income tax rules. We'll be focusing on accounting rules over here. So as per the accounting rule, we will be calculating the proportionate period and we'll be depreciating the amount for proportionate period only. I believe it is logical to you. I believe you understood this. Okay, let us continue. Just write a note over here. You have learnt about how to calculate the rate of depreciation and amount of depreciation according to SLM. Just write a note over here. Expenditure incurred, expenditure incurred, expenditure incurred up to the date, expenditure incurred up to the date at which the assets becomes ready to ready to commercial ready to commercial production ready to commercial production, that is production that is production intended production intended for sale or captivative consumption for sale or captivative consumption should be capitalized should be capitalized and expenditure and expenditure incurred after this date expenditure incurred after this expenditure incurred after this cutoff date should be treated as should be treated as should be treated as revenue expenditure should be treated as revenue expenditure. Understood? Examples of such expenses examples of such expenses to be capitalized, and that includes what? So it includes the following. It includes the following. First, freight. First, freight and in transit insurance. In transit insurance. Freight and in transit insurance. Next is import duties. Next is import duties and import duties and other non-refundable taxes. Other non-refundable taxes. Third, third, cartage, cartage and carriage expenses. Cartage and carriage expenses. Cartage and carriage expenses. Next is site preparation cost. Next is site preparation cost. Site preparation cost. Next is installation cost. Installation cost such as special foundation for plant. Special foundation for plant. Special foundation made for plant. I think it is clear till here. Any professional fees paid. So professional fees. Any professional fees paid. So professional fees of architects and engineers. Of architects and engineers. Architects and engineers. The next is expenditure incurred. Expenditure incurred. Expenditure incurred on tests run. Test run of the machine and and experimental production and experimental production. Experimental production. Next, any borrowing cost. Any borrowing cost incurred. Borrowing cost incurred up to the date. Up to the date at which, up to the date at which substantially, substantially, substantially all the activities, all the activities necessary, all the activities necessary to prepare, all the activities necessary to prepare the qualifying asset, to prepare the qualifying asset for its intended use are complete. Intended use are complete. Intended use are complete. I believe it is understood. I believe it is understood and clear to all of you. Let us take an example in relation to this. Let us take an example and just see how we are solving the straight line method of depreciation. Example 1. Example 1. Cost is given. Cost equal to rupee 5 lakh. Scrap value is given. Scrap value is given. That is 50,000. Scrap value is given, that is 50,000. Estimated useful life. Estimated useful life of the asset is 10 years. Is 10 years. Please write calculate. Calculate SLM depreciation. SLM depreciation and and its rate. And its rate. So how we will calculate the amount of SLM depreciation? Please write over here SLM depreciation. SLM depreciation amount equals original cost equals original cost minus scrap value. Original cost minus scrap value divided by estimated useful life divided by estimated useful life. Estimated useful life. Over here the original cost is 5 lakh. So 5 lakh minus the scrap value given is 50,000. So minus 50,000 divided by estimated useful life, which is 10 years. This means what? 4,50,000 divided by 10 years. 4,50,000 divided by 10 years. So the amount of depreciation will be 45,000. I believe it is clear. The amount of depreciation will be 45,000. Next, we need to calculate the rate. So please write SLM depreciation bracket rate. How we will calculate the rate? SLM depreciation amount divided by original cost and multiplied by 100. So over here the depreciation amount is 45,000 as we have just seen. 45,000. What is the original cost? The original cost was 5 lakh and multiplied by 100. Just solve this. Solve this using calculator. So the rate is 9%. The rate is 9% per annum. The rate is 9% per annum. I believe we understood this example. Example 1 is clear to all of you. Let us continue. Take one more example. Example 2. Example 2. Take a note. Cost of purchase of machine. Cost of purchase of machine is rupee 1,10,000. Cost of purchase of machine is rupee 1,10,000, including value added tax VAT at the rate 10%, including value added tax at the rate 10%. Now there are some cost which is given over here. So just write trial run cost equals 5,000. Trial run cost equals 5,000. Installation. So expenses. Installation expenses equals 10,000. Freight is freight. Freight is 4,000. What is the estimated useful life? Estimated useful life. Estimated useful life equals 10 years. Estimated useful life equals 10 years. Also write scrap value, that is the residual value, which is 14,000. Scrap value, that is the residual value, 14,000. Calculate SLM depreciation, straight line value method depreciation, amount and depreciation rate and depreciation rate. So cost of purchase of machine is 1,10,000, including VAT, that is 10%. Trial run cost is 5,000. Installation cost is 10,000. Freight is 4,000. Estimated useful life is 10 years. Scrap value is 14,000. We need to calculate the depreciation amount and depreciation rate. Machine equals over here. Just try to understand this. The value of machine is in the question given is 1,10,000, but VAT is included at the rate 10%. That means this is 110. So 1,10,000 is basically 110 including VAT. What would be 100? How will calculate this? So 1,10,000 multiplied by 100 divide by 110 equals 1 lakh equals 1 lakh. We need to add the trial run cost, which is 5,000, installation cost, which is 10,000, freight cost, which is 4,000. So these costs needs to be added, but the VAT is not to be added because it is recoverable tax. VAT is a recoverable tax, and that is why we will not add VAT over here. So just write machine is done. Now write trial run cost 5,000, installation cost 10,000. Next is freight is 4,000. That the total is 1,19,000. So the total is 1,19,000. Understood? 1,19,000. Now calculate SLM depreciation. So SLM depreciation amount, SLM depreciation amount equals 1,19,000 minus scrap value, which is 14,000, divided by estimated life, which is 10 years. So 1,19,000 minus 14,000 is 1,05,000 divided by 10. So 10,500 is the depreciation amount. 10,500 is the depreciation amount as per SLM. The next is SLM depreciation rate. The next is SLM depreciation rate. So the SLM depreciation amount divided by original cost. Original cost is 1,19,000 and we need to multiply this by 100. Just try to solve it on your calculators quickly. 10,500 divided by 1,19,000 multiplied by 100. Multiplied by 100. So this is 8.82% per annum. 8.82% per annum. Understood? 8.82% per annum. Okay. Let us continue now. Let us continue. Write one more case. Write one case over here, that is example 3. Example 3. Cost of purchase of machine was rupees 1,10,000, 1,10,000, including CST at the rate 2%. CST at the rate 2%. Trial run cost was also given over here, that is 5,000. Installation expenses is also given over here, which is 10,000. Freight, kindly record freight, 4,000. Estimated useful life of the machine is 10 years, and scrap value is same, that is 14,000. Scrap value is same, that is 14,000. Calculate SLM depreciation amount and depreciation rate depreciation rate and depreciation rate. Let us try to solve it. The machine cost So machine cost is given over here 1,10,000, but that is of inclusive of CST at the rate 2%. And as all of you know that central sales tax, that is CST, is a non-recoverable tax. So that will include in the cost of machine. So machine cost will be 1,10,000 only. Add trial run expenses. Add trial run expenses, which is 5,000. Add installation expenses. Add installation expenses, which is 10,000. Then add freight charges, which is 4,000. Calculate this: 1,10,000 plus 5,000 plus 10,000 plus 4,000. The total is 1,29,000. The total is 1,29,000. This is nothing but original cost. This is original cost. So original cost is 1,29,000. Let us calculate SLM depreciation. SLM depreciation amount, that is original cost minus scrap value divided by estimated useful life, divided by estimated useful life of the asset. Original cost is 1,29,000. Scrap value is 14,000. So minus scrap value divided by 10. So 1,29,000 minus 14,000 is 1,29,000 minus 14,000 is 1,15,000 divided by 10. So this is 11,500. So this is 11,500. 11,500. The next is SLM depreciation rate. Let us calculate SLM depreciation rate equals SLM depreciation amount divided by original cost and multiplied by 100. So SLM depreciation amount is 11,500. The original cost is 1,29,000 and multiplied by 100. Kindly do that, and multiplied by 100. So the value we receive over here is, it is 9.66% per annum. 9.66% per annum. I believe you understood this. I believe you understood. Let us continue. Let us continue. Let us continue. Example 4. Example 4. Cost of purchase of machine. Cost of purchase of machine is given. Just write as 1,10,000. 1,10,000. Excluding what? Excluding CST, that will be 2%. Excluding CST, that will be 2%. Trial run cost. Trial run cost is 5,000. Installation cost. Installation cost is 10,000. Freight cost. Freight charges. Freight charges 4,000. Estimated useful life. Estimated useful life equals 10 years. Write about the scrap value. So scrap value of the asset is 14,000. Scrap value is 14,000. Calculate calculate SLM depreciation. Calculate SLM depreciation amount and depreciation rate and depreciation rate. Calculate depreciation amount and depreciation rate. I believe you understood. Let us try to solve it. Let us try to solve it. Solution. Solution. See over here on the machinery, as you can see, the cost of the machinery is 1,10,000, but CST has been not included. So we have to include CST into that. So over here we will write this 1,10,000. 1,10,000 is 100%, is 100%, and we have to add 2% CST. So 102 is what? So it should be calculated as 1,10,000 multiplied by 102 and divided by 100. 1,10,000 multiplied by 102 and divided by 100. Just do it. 1,10,000 multiplied by 102 divided by 100. This is 1,12,200. This is 1,12,200. I believe you understood. The rest, all the steps are same. Next, rest everything is same. So add the trial run cost to that. That is 5,000. Trial run cost right over here. Trial run is 5,000. Trial run is 5,000. Installation is 10,000. Installation expenses 10,000. Freight expenses. Freight expenses. Freight expenses is 4,000. Freight expenses is 4,000. Let's do a quick total of it. Let's do a quick total of it. Plus 5,000 plus 5,000 plus 10,000 plus 4,000. The total is 1,31,200. This is the original cost. 1,31,200. This is the original cost. This is the original cost. Continue. Continue. SLM depreciation. SLM depreciation amount. Straight line value method depreciation amount equals, what is the formula? Original cost minus residual value divided by estimated useful life estimated useful life of machine estimated useful life of machine. Over here the original cost is 1,31,200, 1,31,200, and Residual value is 14,000. Residual value is 14,000 and estimated useful life is 10 years. So 1,31,200 minus 14,000 divided by 10 equals, first you minus this is 1,17,200, then you make it divide by 10 equals 11,720. 11,720. I believe it is clear to all of you. Now calculate the rate. SLM depreciation rate. SLM depreciation rate. How you will calculate that? How you will calculate that? So depreciation amount, SLM depreciation amount divided by original cost, divided by original cost and multiplied by 100. So depreciation amount over here is 11,720. Original cost we have calculated 1,31,200. 1,31,200 and multiplied by 100. Try to solve it, my dear students. 11,720 divided by 131,200 multiplied by 100. 8.932% per annum. 8.932% per annum. I believe you understood this. I believe you understood this. Let us continue. Let us continue. Example 5. Let us continue. Example 5. Compute straight line depreciation amount straight line depreciation amount and straight line depreciation rate and straight line depreciation rate. Straight line depreciation rate. Note the data. Kindly take the inputs. Purchase price of machinery. Purchase price of machinery equals 1 lakh plus excise duty at the rate 12.5% plus value added tax at the rate 4%. I believe you understood the purchase price. So purchase price over here is 1 lakh plus excise duty of 12.5% plus VAT at the rate 4%. I believe it is clear. Continue. Installation charges 15,000. Installation charges 15,000. Next expense is trial run expenses. Trial run expenses which is 5,000. Trial run expenses which is 5,000. Next is useful life of the machine. Useful life of machine is 8 years. Useful life of the machine is 8 years over here. Residual value, residual scrap value, it is 20,000. It is 20,000. We need to compute SLM depreciation amount and SLM depreciation rate. as we have written as a heading of the question. Compute straight line depreciation amount and straight line depreciation rate. I believe the question is clear to all of you. Let us continue. Let us continue and let's try to solve it. First, we need to calculate original cost. First, we need to calculate the original cost. Original cost. So just write purchase price of machine. Purchase price is 1 lakh. Purchase price is 1 lakh. Now students, you should understand one thing, that excise duty at the rate 12%, 12.5% and VAT at the rate 4% is a recoverable duties. These duties are recoverable in nature and that is why it should not form as a part of original cost. So these are recoverable duties and that is why this will not form as a part of original cost. So purchase price is 1 lakh. Installation expenses. What is installation expenses? 15,000. Installation expenses 15,000. Trial run expenses. Trial run expenses is 5,000. Make a total of it. Make a total of it to find the original cost. 1 lakh plus 15,000 plus 5,000. The total is 1,20,000. The total is 1,20,000. That is nothing but original cost of the machinery. That is nothing but the original cost of the machinery, 1,20,000. Calculate SLM depreciation. SLM depreciation amount. SLM depreciation amount. Original cost is 1,20,000. 1,20,000 minus scrap value. Scrap value is 20,000 divided by estimated useful life, which is 8 years. So this is original cost. This is original cost minus scrap value, which is 20,000, and this is estimated useful life. Estimated useful life of machine given in the question, which is 8 years. Estimated useful life of the machine, which is 8 years. Try to calculate this. 120 minus 20 is 1 lakh. 1 lakh divided by 8, 12,500. 12,500. The next is SLM depreciation rate. SLM depreciation rate. How we'll find that? So we will write the depreciation amount. The depreciation amount divided by original cost divided by original cost multiplied by 100. Multiplied by 100. So depreciation amount is 12,500. Original cost is 1,20,000. Multiply by 100. Just try to solve it. 12,500 divided by 1,20,000 multiplied by 100. Just try to solve it. 10.4%. 10.4% per annum. The rate we got, that is 10.4% per annum. I think it is clear. I think it is clear to all of you. The next example. The next example. The next example. Example 6. Example 6. Please write on 1st January on 1st January 2013 on 1st January 2013 Teakwood Limited Teakwood Limited purchased Teakwood Limited purchased a second hand purchased a second hand machinery second hand machinery second hand machinery for rupees 80,000 and and spent rupee 20,000 and spent rupees 20,000 on its cartage, repairs and and installation. I believe you understood this. I believe you understood this. Just write about the residual value. The residual value, the residual value at the end, the residual value at the end of its expected ends of its expected useful life of 4 years of 4 years is estimated at 68,000 estimated at 68,000. What we need to calculate? Calculate the amount of depreciation. Calculate the amount of depreciation according to according to according to straight line method according to straight line method for the first year for the first year ending on ending on 31st March ending on 31st March 2013 31st March 2013. Let us try to solve this solution. Let us try to solve this solution. So first we will calculate the total cost of the asset. Just write total cost of asset equal to purchase price equal to purchase price plus expenses plus expenses to be capitalized to be capitalized. So over here the purchase price of the machinery is 80,000. Just see this, the purchase price of the machinery is 80,000 and 20,000 we have incurred on repair, installation and cartage, and these costs needs to be capitalized. So plus 20,000, 80,000 plus 20,000, which equals to rupee 1 lakh, which equals to rupee 1 lakh. Next is amount of depreciation per year. Amount of depreciation per year. Amount of depreciation per year. So basically it is total cost of asset, total cost of assets minus estimated residual value, estimated residual value, estimated residual value divided by expected useful life, divided by expected useful life. The cost of the asset is 1 lakh minus the residual value given in the question. It is 68,000. Given in the question over here, it is 68,000. So 1 lakh minus 68,000 divided by useful life, that is 4 years. Just try to solve it. Try to solve it. 1 lakh minus 68,000 divided by 4 equals 8,000. 8,000 per year. Rupee 8,000 per year. 8,000 per year. Next, amount of depreciation. Amount of depreciation for the first year. Amount of depreciation for the first year of purchase. First year of purchase. Just write over here. Amount of depreciation for 3 months. Amount of depreciation. Amount of depreciation for 3 months needs to be calculated for 3 months. So over here this 8,000 is for 12 years. 8,000 depreciation is for 12 years. We need to calculate for 3 months. So 8,000 multiplied by 3 divide by 12. 8,000 multiplied by 3 divide by 12, which equals rupee 2,000. Rupee 2,000 for 3 months. I believe you understood this. I believe you understood this. Let us continue. Just write suitability. Just write the suitability of straight line method. Suitability of straight line method, that is SLM. Suitability of straight line method, that is SLM. Suitability of straight line method. So in which kind of businesses it is suitable, just take a note of it. In which kind of businesses it is ample to use, it should be used. This method of depreciation should be used. So SLM is suitable. SLM is suitable for those assets. SLM is suitable for those assets in relation to which in relation to which a repairs charges are less. Number 1. B, the possibility of obsolescence. The possibility of obsolescence is less. The possibility of obsolescence is less. So this method is suitable for furniture, patent, copyright, trademark, leases, etc. So this method is suitable for furniture, patent, copyright, trademark, leases, etc. I believe you must have understood this. So my dear students, let us take a quick recap that what we have done in today's class, and then we'll wind up the session. Let's take a quick recap, like what exactly we have done in today's class, and then we'll wind up the session. So this was lecture number 3. We learned that straight line value of method of depreciation is there. We have diminishing balance method and unit of production method. We started with the first method, and that is original cost method or straight line method or fixed installment method. We learned its the formula, that is the cost of the asset minus scrap value, that is the residual value, divided by the estimated useful life of the asset. By this formula, we'll be able to calculate the straight line depreciation amount. For calculating the straight line depreciation rate, we understood that the straight line depreciation amount divided by the original cost of asset and multiplied by 100 needs to be done, and this rate will be in a percentage form. I believe you understood this. Then we learnt that we calculate the depreciation as per the proportionate method. So supposingly we have used the machinery for 3 months only, and in that case we have purchased it from 1st January 2021, and the year close is to 31st March 2021. In that case we'll be able to calculate the depreciation for 3 months only. We'll be charging for 3 months only. We taken few notings, and we seen a numerous examples where we changed the cost. We have included the excise duty, we have not included the excise duty, excluded the excise duty, included the VAT in it. Together we have done it with the VAT and excise duty. So, and after doing all these examples, then we understood the suitability of the SLM method, and we understood that in case of furniture, patent, copyright, trademark, leases, etc., these should be used, and this is highly suitable. I believe you understood this. I believe it is clear. Okay, so we wind up the session over here. We'll wind up this session over here. Thank you. Thank you.